Good afternoon, everybody, and welcome back to another StockTwits Q&A session. I'm here with Scott Red Dog Redler. He's going to be answering your questions live. But before we jump into those, Dow's at an all-time high, tops 14,500 for the first time. S&P's 2 points away. So how's your day, Scott?
I'll just, give me the rake. We're just raking in the money, let me tell you. You read the headlines and you look in the media and you would think that everyone out there would be excited, everyone would be, kind of ringing the bell and this and that. And I feel like that's still not happening. And I know as a trader, we've been a long bias, and I've been talking about road to S&P 1700 and trying to have a portfolio approach, but it's still not the easiest environment. You still have to be able to follow the money. You still have to be able to use tactics and add to positions that you like. You still have to, use disciplined money management, all the tools in the formula that we talk about in order to trade the intermediate ranges, because there are guys that are trying to be extra cute and they're trying to fade strong stocks or overdo on the hedges and this and that, and it's taking money away. I will say, my wife yesterday looked at her 401k and she's like, "Oh, Scott, we're doing really well." She's been in the workforce. Anyone who's been contributing to a 401k over the last, I would say, 5-6 years, they're probably happy. Even those who might have been a baby boomer that didn't need to cash in their 401k or their IRA because they refinanced the house too many times, they're probably happy because they're finally in the green. It's just, some people that have, tried to be extra cute, might feel a little ugly. And at this particular point, you still need to know what you're doing. You need to know your time frame. And there's a lot of resources and tactics that go into play if you try and navigate it, on an intermediate level. Yeah,
when you see everybody celebrating the market rallying like this, for those people who haven't been able to rake in the money, it must get pretty frustrating.
Right, especially for those on the sideline, those who last year thought that the European Union was going to break up, those who watched a lot of different media sources and thought that the fiscal cliff was going to derail everything, or the sequester, or Mayans' end of the world, and they pulled out because of the obsessive headline-driven scenarios. But meanwhile, we're now at all-time highs, and it could continue. But again, you don't want to be the buyer or the initiator after 13 up days or 12 out of 15 up days or whatever that whole ratio is. I don't care about the streak. There are times to be involved. There are times to be in a tier 2. There are times to have, multiple positions when things are breaking out. And then there are times to, trim and trail. But I do think that because of the extent of this rally and the streak of this rally, people have trimmed and trailed themselves out of good positions and feel like they left a lot of money on the table.
Yes, and I think somebody actually tweeted that to you today, right? That they trimmed and trailed their way all the way to being in cash.
Right. So they got a crew cut. Trim. You only have so much hair left.
Right.
So you got to be careful that you don't over trim.
Right.
And trail something, stay in something. But again, it all depends on your position. And then there's divergences out there where you would think some things would participate and they're not, and then some things close strong and then the next day they're down, and the continuity hasn't been great. So if you're out there and you're trying to be long and you're trying to maneuver and you're not, getting gratified the way you think you should, listen, you're not alone. But if you're also just short on the brain and you're not participating and you don't want to educate yourself, then it's time to take accountability and start making a change.
Well, let's jump into some of these questions here because you guys are sending in a lot. We have one from Turtle Trader asking you how much time you spend each day pre-market scanning charts and looking for trades.
Okay, well, that's part of the routine. So I'm going to go through this quickly because I want to get to the stock questions. Basically, I'm in every day. I'm taking a 4:45 ferry. So I'm on the boat, I wake up at 4:45, 6 o'clock ferry, right there. I'm on the, reading my IBD on my iPad. Yes, I do have an iPad, not a Galaxy. And, I do my preparation. I come in, I write a big note that goes on the site. The night before, I typically do a lot of my preparation with the charts, and then we also put that in off the charts in our product. And it's a routine every day. Day in, day out. I'm usually at my desk by 6:40. I do multiple things to get myself situated for work. You can't just walk in, or turn on your lights at 9 o'clock and think you're prepared for the day, because a lot of things are happening quick. A lot of things are triggering, and unless you have your if-thens in front of you or your price points in front of you, or the speed and the composure, and when something's different, you're not going to be able to have the conviction to get involved. So with that said, everyone has a different routine. My routine starts really early, and I kind of yell at people in my office if they're in too late, and then they're upset that they're not making money. So I would say, create a routine, like your routine, because you have to do it every day. And the only way you're going to have success is following it with a formula of discipline, money management, knowing your setup. There's so many things. It's not just one thing. Again, it's a formula, and it's a formula that's used for any business and any success, but I do think routine is key and starting it early is key.
Right, and so you're probably scanning charts looking for trades for a good couple hours then before the market opens, right?
I do a lot of it really the night before, and I also have a lot of it in my head. And again, just to finish up on this question, that's why we have Off the Charts. Off the Charts goes out at 8 o'clock every night. There's 8 to 10 charts on there that are set up or setups that have worked or just a composure in situations that could be on your forefront. And then in the morning, I'm really looking at the futures. I'm writing down price points for the price point sheet for the actual trigger prices. So if it gets through, I know what the price is and I can overlay that on the chart, get involved and know why I'm doing it. And the key is to know why you're doing it, and that's the tactics and that's the strategy. And at this point, let's just start, getting into some particular.
Yeah, I know you want to dive into the stocks, the real meat of it here. All right, let's talk cores because we're getting a lot of questions about cores right now. Tommy says, I'm holding cores in my IRA. It seems to be selling off lately. Is it still a good macro hold? And we also have one from Stock One Trader looking for a good entry point.
All right, well, cores has been an unbelievable trade since the IPO. There's been multiple times to get involved in cores. And cores actually looked really good after earnings, but then they did another secondary. You can only do so many secondaries, especially at a certain time. Stock looked unbelievable, looking like it was going to break out for 52-week highs, then boom. Insiders did a secondary and it crushed the momentum. You look at the overall chart of cores and you will see that it has been a really nice macro trade. Look at this. This is why we get excited about IPOs. This is where it came public, and then there were multiple times to get into some core trades. One of it right here when it cleared this pivot. Then you had a big gap up. Okay, went sideways for a long time. Then another gap up. You could have traded versus gap up. And then, when it crossed this downtrend. And then all of a sudden, fast forward to where we are now. Okay, and you had a nice gap, and we talk about trading verse gaps because they mean something. Well, here is when it went out on the highs of the day. That's when they announced a secondary sandbagged a lot of momentum traders who then got caught and probably got trapped and had to hit out here. Then it broke price. And then you had a small reversal right there, came up, retested what was support that turned into resistance and came lower, and now it's still thinking it needs time. It's below the moving averages. I would just be very small. At this point, we've seen some of these corrective processes in cores. I still think the company's great, I'm sure. Do you have anything that was sold by cores?
Yeah, Michael Kors said they make a lot of nice things. I think they're a solid company.
That's a Warren Buffett approach. If Brittany thinks it's solid enough, there are a lot of people that are solid enough to buy there. And anyway, I do think it's had a big run, and it's in one of those choppy consolidation time periods where I think you need to have a little less on versus looking for momentum because they stuffed the momentum on that secondary.
All right, well, Stock One Trader was also looking for a good entry point for Dunkin'.
Dunkin', okay, as we're talking about the last year's Three Amigos, we talked about Three Amigos, 3 IPOs that had the potential of being macro winners, and Dunkin' was one of them. And if you look right here, it's had many different setups throughout its young life in the public markets. And this was remember this cup and handle pattern way back when we were really talking about it a lot. Here's where you had your nice breakout, and then boom. Okay, at this point, it tried to hold support, broke, became a little choppy again. Then it broke this downtrend and made a new high a little while back. So if you want to talk short term, okay, this too, it's trying to hold support. If you're looking to get involved, it's better always to buy on into support on a stock like Dunkin' because sometimes it's not like a momentum name. You did have a small red dog reversal right here where it tried to go, made a new high, closed in the lows. So that was a signal that perhaps you were getting a little reversal in what was a nice trend so far this year. Okay, so at this point, buy a little bit. If you don't have any on, buy a little bit into support, the 50-day. But overall, this thing is choppy and it's not the easiest to trade. It's not that clean. The 200 days down here, it's not showing relative strength right now, which I like to be in the names that are showing relative strength. But there is rotation, and if you sold into this little reversal up here into the 39, this is a spot to maybe nibble against. But again, this one also I feel like it needs time. That the chart pattern isn't something that traders would think is sexy right now.
Now this question could get pretty long with your answer here because this was pretty much our entire morning call this morning if anyone tuned into that. But Stone Street Trader here wants to know what stocks from your 2013 predictions do you think still have more upside? So maybe pick a couple of your favorites.
Well, they could watch today's morning call and
right.
get the full update. I think it was like 25 minutes, 5 minutes extra. But it's different. A lot of times what's hard for people that also trade in the trenches and also make some predictions and if-then statements is what happens when things happen quicker than, or they happen in the first quarter versus, the whole year, and then they met your expectations, and you had expectations for a reason. Okay, that's where resistance comes into play. That's where a calculated move would happen. So if you just start increasing your expectations and you don't take any money off the table of this and that, it's hard. Like just say Boeing, for instance. Boeing started off slow this year, okay, and we liked it a lot going into this, what's it called, this whole big channel. Okay, that's why I like Boeing. And the trigger was around 77, 78, and the measured move, well, the first part of it was till 85. So it met it. It did it. Take some trades off. And then on a short-term level, it didn't, it looked like it was going to do a little reversal, but it had a doji. It needs time for the 8-day to catch up. You go to a weekly chart, I still think the weekly chart shows that there is more room in Boeing to continue, okay? Like it just broke out of this really long channel, and you did have a nice move, but then this, I think, was one of the targets right here, right around this 90. I still think it can get there. So, I would stay with it. It looks okay. It looks actually great, but not okay to enter right here. And just trim and trail it, and don't trim yourself out of it. I would say, like on a different note, I talked about, if you come to me, Facebook. Okay, Facebook mentioned in the 2013 thesis that it can get to 32-ish, 33, and it went there in the first month. It went there in January, and I remember taking some off and said, wow, it just went from 27, 28 to 32, nice percentage gain. Let me take it off. Had earnings, it had that whole search, invitational event that was sold, and now it acts pretty horrendous, to be honest. I was thinking that it could, it could continue and go again. The first part of the cup and handle that I think we had in this thesis was right here, okay, which, if you look at it, from this level, this looked like a really nice handle coming in. Here is your cup. So coming into the new year, I'm like, this looks really good, and it could probably get back to, the old resistance around 32 to 33. So if you look what happened here, boom, 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 okay, right into there. So why not take some off? But then you go to the daily chart, and you'll see right now that, it had that really nice move, okay, and it was sold. And then this was when I think their earnings came out, and it was, kind of sold again, and now it's taking time. So do I think that there'll be opportunities in Facebook later this year, and we still have a long year left? I do. I don't think that this is going to be, the highs here of the overall move, but right now it's not acting great, and I don't know why. And I'm not going to, try and tell people just sit and hold your nose and go underwater, because it's not what I'm a technical trader. We trade real time. If it would have went above this 2860-ish area, it would have looked good and could have kept going. This is when I re-entered it, on this little red dog reversal. This is when it gave you a little small, follow through, and then, it broke this small trend line, and now look where it is. And it's been weak when the market's strong. So if you don't want to hold it, then, right now I would put a stop. If you go back to the chart, right there around 26.34. I'm still long it. I'm not long a lot. And if it broke this, I'll probably get out of it, and then I'll revisit and wait for some type of bottom strategy again, kind of like what happened here before it went, and we'll look again. Because if you go to LinkedIn, for instance, which I had a long-term thesis on also, okay, because of it being a new issue, the whole scenario. If you go here, all right, a lot of different times it failed. Okay, this was the cup and handle that we were talking about then. Okay, here was your cup, here's your handle, and look how choppy it was in this mess. Okay, before it actually had enough quarters underneath its belt for institutions to feel comfortable that the growth was there before going. And a lot of people might have gotten out of it, said, oh, this is horrible, and then they never got back involved. So if you're a macro investor, you want to make sure that you're in it and you stay the course, or at least if you get out of it, you get back into it. Okay, this was a nice trade here, and then look what happened. Failed again. So think about everybody right here who said, oh, I'm getting out of it because it broke this upper level, right? Look at this upper level, why not? Looked like it was hovering, looked like it was going to be the time for it to go. Had a nice breakout, this was a really nice trade, I remember it. And then, boom, broke to the downside. So if you got out here, you're probably like, I did great. I got out of LinkedIn before coming all the way down to the 200-day, but if you didn't get back involved, you missed what finally was a really nice move all the way to where it is here. So with that said, you need to know your time frame and know that these patterns sometimes take multi-quarters to put together before they could actually go and have real traction. So if you're going to sell right here, you better make sure when you see, it hold the bottom of the channel, or you see it start acting better right around here, which is when we started talking about it again, right around, I think, this 109 or 114-ish. you have to know to get back involved. And overall, so I think Facebook later in the year will have opportunity. Right now it's in a bad spot. And if you were in LinkedIn and enjoyed the run, it never hurts to trim and trail.
Right. Now, just keeping with the predictions for 1 minute, what about your retail and tech stock picks of the year last year, Walmart and Google?
Well, Walmart, I think, still acting well. I liked it last year because of the channel. So go back to the channel. And I don't want we focused on this so much in the morning call that I don't want to, beat a dead horse, so to speak, even though I like beating dead horses. Kidding. Here's Walmart. It looks a little, I don't know why the chart's a little stuck right now. Let's go to the monthly. All right, so you go to this monthly chart on Walmart, okay, just to give you a little education. Look at this channel. Everyone for a decade was saying, look at Walmart, what's wrong with Walmart? The stock's horrendous, blah, blah, blah. Meanwhile, look at the move that it had to digest. This was a 4-year move from 20 to as high as, what was it, 72-ish or something like that. So this is when I said, okay, we're not in a blockbuster economy. People are shopping at Walmart, Target, blah, blah, blah. Breaks above 62. We could see a move through the highs. That's why we said 75. So what did it do? Went through it. You could have sold some and then retested it. And now if you go to your daily chart, you will see that it's acting pretty well. Okay, the last entry we talked about off the charts was right here when it went above 72. Now it's holding the 8-day. I would say it still looks okay. I would rather have seen you enter it here. But the longer it stays above the 8-day, the higher the probability you can get through 74 and continue back to the highs.
Great. Now we have one from our friend Ben C. Banks here who says Sprint looks like a put in the drawer type of play. He says doesn't seem to move but a couple pennies a day but has a macro pattern. Would you agree?
Yes, I think Sprint has a big macro pattern and it's been sitting here for 6 months. So when something's sitting there, you just sit in it with less. You sit in a tier. That's why I use a tier system that doesn't bother you. And I would say Sprint has to be like if you're in a multi-position approach. I think right now I have like 8 or 9 longs on. It could be one of them. And you don't want, if you want to keep it on your radar, it's hard to do if you don't own any. So if you want to be in it, you want to see all of a sudden when volume comes in, because if you have it, maybe something will flicker on your screen or whatnot. But really the stock needs to get through this area right here, this 596, in order to really break out. It is really tight, and if you think about it, it gapped up way back here in October. How many months ago is that? 1, 2, 3, 4, almost 5 months ago, and hasn't done anything since. So there's only so long that it could stay in such a tight range. But it's going to need massive, I'm talking massive volume in order to get going. You want to put volume on here real quickly? You'll see how there's been none. Okay, on this big gap up, there was massive volume, and they actually sold that somewhat. They're not horrendous, but look at the big move it had from there. Okay, this was your gap up, then was a gap and go, and then this was your gap that said, okay, we have to consolidate. So again, consolidating up here. There's lots of different stories about Sprint with SoftBank owning a big percentage, and I don't really know the whole fundamental thesis, so I'm not going to pretend I do, but I know it's tight. I have some also. Gets above 596 on heavy volume, like something that comes in like this. Then I think you go to your weekly chart, and you look where it came from. It's come from really high up way back in the day that it's getting so tight here that once it clears this, your next spot really could be $8, $9. So it's worth keeping on the radar and putting in the drawer, but have maybe some indicators on it if you see huge volume, or if you see, or maybe even put a buy stop in it at 596 if it goes through it. Okay,
let's talk E-Trade. Homie here says, what are your thoughts on E-Trade for a long play? Is there upside left?
This is a ETFC, right?
Yep.
Okay. This is one of those things that happen and traders hate, right? Stock goes out on the highs of the day as a momentum trader. What do you like? Stock goes out on the highs of the day, breaks out a level. Usually that's, according to my good book, I take it home long. And I say, wow, that looks good. Should get some follow through. What's a trader's best friend? Follow through, momentum, right? Because you want to see continuation to a move. And if you look what they just did with E-Trade, they announced a spot secondary. So let's go take the volume back out because what's it called, skews some of my charts here. So look what happened here. Okay, you had a really nice move in in the stock. I remember Jill and I were talking about the online brokers. She liked Ameritrade and I liked Schwab back in December. We'll get to that to a second. But here's where it broke out above a level. Look at that. That's clean. That's beautiful. Okay, broke out closing the highs of the day. And then what do? They announced a spot secondary. So most fast money that was chopped in there got out, and I think at this point it's going to need time. I showed you what happened with cores when they did that at the highs. So I would say 1056 is a big level of support to hold. It's going to be in the penalty box for a little while. Just to touch on the two stocks that we spoke about in December, one of them was Schwab. This is the one that I liked around 13, 14. Plus, I also speak for them from time to time and do presentations, so I was a little biased towards it. With retail coming back and maybe interest rates going up, this type of stock or company can make more money. At this point, I think it needs a little rest. And just to talk about her trade, which was Ameritrade, also did really well. Very early call. She actually made the call, and I just went with it. Congratulations, Jill. And there you go. And here was another nice move. And closing the red today, extended. But if you go to the weekly charts, you'll see that actually this thing has recovered pretty nicely. But this was, I guess, the peak way back when. And it achieved, I would say, its daily goal, and now it's going to need really, the market to continue and volume to pick up in order for it to break above this. Really, this is like a macro channel. So that's interesting. Let's see what the Schwab macro channel looks like. A little bit more sloppy, but right back to resistance. So I would say this is going to be a tough spot, this 1920 spot for Schwab also.
All right, well, we have a question here from God himself.
Who?
So
What's he asking me a question
for? When God asks you a question, you better answer. So
I have a few questions for him.
We'll get to those later. That's a whole new show. God seriously asked, Scott, any thoughts on Fusion IO, a possible inverse head and shoulders formation?
Let's take a look. FIO. This is a stock that traders definitely gravitate towards at times. It's been really battered and bruised. Okay, this is a longer term chart on it. Yeah, I would say like some of these heavily shorted stocks that have come down and people need something to do. Here's your left shoulder. Here's your, a little bit of a head. Here's your right shoulder. And then you have a gap here, okay, which people love when there's a gap there for trades in with some power. And I would say that this is something, it's a laggard place. You have to be careful, but it does look like it could, play a little catch up. If we talk about gaps and how sexy it could be when it gets filled, look at BMW, This had a big earnings gap to the downside. We talked about it having some continuation if it didn't get filled in this time period, and was a good short. And then all of a sudden, boom, okay, they had their conference and it ignited, and look how nice this was for a trade if you just traded it when it went in this gap. And then today it opened down, traded above yesterday's high for continuation, and now it still has room. So as a trader that didn't get caught in this mess, it turns into sometimes a really nice profitable cash flow trade when you could see how a stock reacts in the gap, and this was explosive through it. So hopefully you made some money on that. And FIO is a different story, but it looks okay, fair.
All right, well, keep sending in your questions, guys. We're going to take a quick commercial break, and we'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and answering your questions live, but before we get to the rest of the questions, Scott, we are within 2 points for the S&P away from its all-time high. So do you think we'll get resistance, we'll meet resistance at that 1576 level once we get there?
Well, if you remember, I think it was like 2 weeks ago, I talked about how 1530 was a pivot point. I'm like, how do we handle 1530? Because every time you get to a major pivot point, there are 3 scenarios. 1, you get close, sellers come out and it fails. 2, you get to it, you push through it, you squeeze every short that's been shorting up to it, they get out, then you close back below, it creates a tail, and then that could, figure a rest. Or you blast through it and close strong and then continue. So you look at the chart of the daily chart of the S&P, this is what I was talking about. It happened 2 different times. First of all, first one to start the year just for tactics. Remember 1474? That was right here. Talked about it, said if we can get above 1474 or how we handle 1474 will let us know how high we can go in the first month of first quarter. And when it went there, it paused, and then pushed through. Okay, so that showed you that it can continue. And then it continued all the way up into the 1500s. Then this was your peak before the first mini correction, 1530. So then here we are again. pulled in. This was your first time you could have maybe went to a little bit more tactical. Remember, we broke the 8-day, we broke the 21-day, and then you had this wide range bar where at this point I think I was almost net short for the first time somewhat, after this ascending channel got broke after riding a really nice trend. But then just because I'm flexible, first of all, you had a little red dog reversal right here just to show you what that tactic is, because people say, what's a red dog reversal? It's a way to play a counter trend move with the plan, and the plan is if it breaks below a level like 1487 there, which happened here, to 1485 and closes back above, it's a good tactical trade, and that could have been your swing long. And then from there, you saw a quick move back to resistance where it paused, and then it held halfway. It held higher. So right there, this showed you that you should be entering your positions back, that this little pullback meant nothing. Okay, or some people just said, I'm going to cost average it up and it has to come down, whatever. So PS, we said at 1530, what's the story? Do we hit it and get a double top and fail? Do we push through, squeeze some shorts that we're still rolling it in from here, or rolling it up from here, or rolling it up from here, or out of business, whatever, and then come back below? But what happened? It squeezed through 1530 and then closed strong. And from there, we've been slowly trending higher. And then recently we talked about this little mini floor. We're like, okay, people are like, oh, we have to correct. I'm like, well, let's see if this mini floor holds. In the spiders, it was 155.20. In the SPX, it was like 1545, 1548. And what happened? The 8-day caught up, and then boom. So now, Brittany, what we're going to do is, because you could overlay tactics on every time frame, now everyone's saying, 1555 to 1576, because you have the intraday high and you have the closing high. So everyone uses different things. So the question is, are we going to blast through it? And then every short that's been short, the prudent thing is you have to cover. Hopefully they're not that short. Or do we fail there and pull in and have a little correction? Then that builds up enough strength for another push through. Or do we push through? Everyone gets squeezed out, chasers come in and then come back below, and then we rest? Or do we push through, close strong, and then continue to 1600 or so? So the only thing you have to know is the three scenarios. You go to the chart here, you'll see. You go to the monthly chart, and here we are. All right, I've shown this chart in so many different presentations, just talking about like time frame analysis, where a lot of people in the 80s, they said, could we ever get back to like the 80s when you had the roaring 80s? We were up really nicely. And then look at the move we had in the 90s. Okay, this was an unbelievable move. So what happens typically after, even if it was a stock that had a huge move, boom, you have to consolidate. So what took place in the last decade? A heavy consolidation, a lot of obstacles, the financial crisis, the dot-com bubble, you name it, the 9/11. But anyway, in this scenario, you had a few different trends as an active trader to follow. Here was a descending channel that broke to the upside, and then you had an ascending channel here, okay, that wound up breaking to the downside. Then you had an outside day right here, okay, near the end of the channel, and then you've had a higher low, another higher low, another higher low, and now look where we are. We are right back to these highs. So, just talking about a lot of people on a lot of different levels. If you, still did every month into a 401k, into an S&P fund, you cost average yourself into a really nice position for us to potentially extend. If you thought you could time when you got scared out of it, that's the people that are really upset right now. If you're an intermediate trend trader, whatever, there's been some multiple chart patterns that we've showed on a different time frame, which I'll get into another time. But anyway, the question is, to get back here, how do we handle this? At this point, nobody truly knows. All you know is that 1576 is that intraday high. The closing high that day was, let's see, what the closing I think was somewhere around, I think people are saying 1556. I'm not going to get into it exactly. So you want to, make it bigger to see here. Here it is. We're already poking through, and we are extended from the 8-day, and you can't really stay that extended from the 8-day for too long. Here's that little peak. If we were to get above and close above this, there is nothing here. There's nothing here. It can go anywhere. So if you're going to continue to roll this up, you better be careful. Look at the people, just say with the Dow Jones, the INDU. Okay. First of all, let's go to the daily because it shows it a little bit more extreme. All right, this is where we started the year. This was the push through last year's high, which was important. Okay, this was like your 1474 or 1476 in the S&P. First move, consolidation. This was your exciting entry. Now you pushed up 3 days, and here we go again. But all in all, you go to your weekly chart, and you look how we are above. The high here. Okay, when you make all-time highs, there's nothing out there. It's all just about measuring the price action, and you never know when it's going to end. So at that point, that's why these all-time highs are important, because it's your last point of reference. This was the last point of reference in the Dow. Okay, and now if you've been shorting it every single day, you're definitely not feeling great when you keep reading the headlines and say, oh, it can't continue, it can't continue. You know what? It can, until you see something different. So all in all, I still think it's not an all-in, all-out environment. It's trade multiple positions, follow the money, use a tier system, also have a hedge just in case something happens at night. I know the hedges have hurt. Listen, I've lost, or at least a lot of money was taken away by me having multiple positions in a spider hedge, because that's cost me money. At times I try and be cute and trade around it, and it hasn't really worked, because every time we pull in, everyone out there under the sun saying, oh, here it is, then you add to your spider hedge and winds up taking money away from your good longs. But anyway, it's no time to get super excited. It's no time to change your game plan. It's just time to not fall asleep behind the wheel and recognize that there is opportunity in a lot of different sectors and a lot of places, and learn your tactics.
Right, and it is interesting that you note that despite a lot of people out there saying that it can't keep going higher, the fact that it can. We have people chiming in like StockTwits here saying the S&P can't go up without a pullback at this rate. Will it hit 1,600 by next week? And we just might, right?
Well, the same thing. I said if we get through 1474, we're probably going to get to 1,500 and change. If we get through 1530, which was our last pivot, chances are we get to 1550, 1570. Now, if we stay here, like we just had a 2-3 day consolidation, we blast through, and we close above 1576, there's no reason why we can't get a squeeze to 1,600. And everyone who's cost averaging their shorts, you're going to probably run out of money. And I hate it. There's so many guys out there, I'm not going to name any names. If you know them, you know. So, they wrote the doomsday thesis for 2013, which kept people out of the market. There are guys who said, oh, we'll call the top 1480, or it's going to do this, and this has to happen. Nothing has to happen in the market. The market's a big place, and it's freewheeling around the world. Everyone, is contributing, and the market's only going to tell you, what's going to happen. So if you're trying to have an opinion, you're going to get crushed. If you're going to have a thesis and you wait for the market to confirm your thesis, then you act on it, whether it's long or short. And at this point, if you're not in anything, do you go chase up 12 days? Probably not. But do you get frustrated and just start shorting everything because you feel like you're revenge trading? That could put you out of business and probably keep you away from the market for a considerable amount of time.
All right. Well, let's try to keep people in business and get back to some of these questions here.
Keep the lights on.
Yeah. We have a bunch of questions actually from people asking for the best way to enter an IPO like the X1 company. Millionaire to be says, I know you don't personally do IPOs, but I bought X1 at 30. What do you think of it?
Well, I personally do IPOs. Do you do IPOs? Do you too? Today, actually, Steve LeVay, who's a contributor for T3 Live, was trading X1, and he had a great entry. Like if you look here, just to show you, new issues. First of all, we have the art of the first day, which was really nice for X1. Remember, the opening print traded above it, gave you a second day. But then really for a macro trade, it needs time to create a pattern. And so far, this pattern had a nice pivot right here at 29. So with that said, I know Steve was all over with some guys in his room. I didn't trade it because I was caught up in other things. And this could have been a nice macro entry at 29. Or some guys might have said, okay, I'm going to buy it here versus the low. Depends on your style. And now really there's nothing in its way until the previous highs here. So all in all, this one, even with Triple D being weak and some other things being weak, is acting very well. So at this point, I would say it's still, typically IPOs need like 3 to 6 months to prove themselves to make highs. But you look at something, again, like Coors, when it came out, way back when, let's just get to it. I'll just get you right there. Sometimes it happens really quick. And if you look at Coors, look how quickly this thing proved itself or made new highs. And it's the same type of thing. Just to give you an analysis of a really, if it's a strong IPO and people want it, it sometimes doesn't wait multi-months. And if you look here on Coors, this was your level, okay? This was the first, spot where it traded up, and this was your rounding top. Held in there, your entry could have been right here when it broke this downtrend, or when it eclipsed the recent highs right there. And then since then, it's been unbelievable. So you go back to X1, not saying it's going to be the same thing, but it just broke its downtrend today. And I would say if it stays above it and holds just say, the top third or the top 50% of this wide range bar, it could continue higher, and you might have caught something that could be a huge winning because supposedly this is the next best technology. It's a new way of manufacturing. This one it's been an IBD, it's been ridden up, and they say it's for real. So the chart said today, it's on the map.
All right, let's talk some solar here. Mojo says, Scott, what do you think about First Solar above 2780?
I think, Taylor at Monroe brought it to my attention today. It's funny how you can remember things. I can't remember to take the garbage out on a Thursday morning, but I remember that level is a gap, right? It was going really well. The stock was moving until it had bad earnings, and then you look at FSLR, we talk about gaps and why some people get excited because, people trade against them, and gaps typically at some point get filled because, there's a void. And right now, if you weren't in First Solar here, and you're like, I want to weigh in, and you like the concept or the whatever it is, here's a nice gap. Okay, it wound up hitting a low after this, big gap lower, and now it's been trending up. And if you were short this thing, you'd probably feel a little uncomfortable if it starts trading above, what is this, 2780. And if you were looking for a cute long, to fill a portion of this gap, that would be your entry. So I do think that this deserves to be on your radar. And if it can get above 2754, I probably will, look for it as a trade also. And then you want to see how much of this gap gets filled to see, if it negates the power of it, and then it starts, a whole nother move, because people remember where First Solar was. It was actually, by the way, look how clean this looks now. You look at this, say, when is something going to end? And here's your upper wedge, and pow, and then it tested and missed, and then boom, look at this support that just broke. So anyway, you go back to this on a, on a more short-term basis. Here's a nice juicy gap. If it can get above there and stay above it, there is a big short interest, and I think that you get a trade there.
Well, tonight is the big Samsung Galaxy S4 release event in New York City. It was sparking a bunch of questions about Apple. We have one from Stone.
No, we don't have any questions on Apple.
Just a couple. Weird, but just a couple. We have one from Stone Street Trader. Says, you still think Apple could be a buy the news event on the Samsung Galaxy release?
Well, my money is where my mouth is, and my mouth is shivering a little bit. This downtrend has been so relentless. And even being prudent and telling people to watch their step and trade a level versus a level has been hard to do because of the velocity of the down move, and then even the lack of follow through as we've gone lower. But at this particular point, you look at the chart of Apple, and it's a little interesting again, especially if you didn't really get caught. And we go back to this chart and we talk about when trends change and you never know where things are going to go. Well, a few different times along this process here, okay, just with your head and shoulders top, when it broke this one support here, when it broke below the 21-day, if you would have told me that it was going to go to 420, I would have said you're out of your mind. And I think I might have told people they're out of their mind. But if you would have measured it along the way and saw that it never went back above the 21-day this whole way down, kept you out of the way, and then finally had this little red dog reversal that rallied back up to the trend, but then it should never have broken that to continue. Then we started off 2013, igniting bar, should never have broken that if it was going to continue. And now this downtrend has been controlling this thing for multi-months. And unfortunately, I have no idea where the hell Tim Cook is. Sorry for using hell, but it's really weird. You have Samsung just come back to me. They spent $400 million on commercials. And what do? Perception, psychology. They had a Super Bowl commercial with those two guys, whatever their names were, was just kind of funny.
Paul Rudd and Seth Rogen, right? That one?
Yeah, and it was like, you chuckled. At least it was interesting.
Right.
Okay, and then they have ads in different newspapers and whatnot. And it feels like Apple is like, where are they? It's like, you ever see The American President when, it's just that movie when, the guy was abusing the president, abusing him, and he was like off in La La Land, and then finally he came and made his big speech.
So you're saying Tim Cook's the guy in La La Land?
He's in La La Land. Wake up, Tim. You have a company, you have investors underwater, you have, you're losing it. At some point, everyone's not going to care. Okay, even like the iWatch now, people like, all right, the glasses are going to be, but anyway, let's just get back to the stock. All right, here we are. What do we know and what could happen? So this is the chart one more time. You look here, the last level we had to trade against was right here, which was somewhere around, that was at, what was that? That was like 435, 442, we broke below. Okay, then it really didn't, get down and get crushed here, but it's been so battered and bruised. And you do have a small little trend line here, and this is starting to come right into it. So I would say I'm in small, and if it were to start getting above 440, okay, that could be some type of signal for some type of change. But ultimately, I really think that the downtrend, in order for something to be different, it needs to get above, just say, this 455, and then maybe we see some type of retracement back up to, I don't think it's, to be honest, this year, I don't think, I call me crazy, but there's not a shot that it gets back up here, and I don't even know if it'll ever get up there, to be honest. But as a trade, traders are looking for some kind of counter trend move to what just took place here. So for me, that it's been taking it day by day, what I did is a few things. First of all, I bought a call spread. Okay, just to talk about what a call spread is. For next Friday, because I feel like it's so power packed that if something's going to happen here, whether they announce a dividend, a buyback, or who knows, maybe Samsung's event will be a dud tonight, or it's a buy the rumor versus sell the rumor, that we're going to break above 440, and it could then go to 470 or higher. So what I did is, just so I take some of the anxiety off, and I wanted to have my risk with premium paid, I bought a call spread today. Okay, which I know that if I'm wrong, it's going to be worthless. So I think the pricing was I bought the 435s around 6, and then I sold the 445s around 3, and it cost me $3. You could stay the same 3. It could have been 1 call, it could have been 10 calls, it could have been 100 calls. But at least you know your risk is $3. So if something happens where, again, the event's a dud, and maybe Tim Cook finally says something and it ignites above 440 and does it after hours or does it pre-market and you're not there, you then could have, from 435 to 445, there's $10 in there. If it costs you 3, you make 7. So it's costing me 3 to be, to maybe get more than a double. But hopefully, what I'm really hoping for, it happens intraday. You see heavy volume, and I could trade it through 440, get it the size that I want, and then I could stick with it with the shares. So either way, I'm in it 2 ways. But then also lately, if you try to buy strength in Apple at those key points, it fails. So in a way, I know I don't have to overtrade it, because at least I know if it does, do that quick move through that little action area, I'll make a double and a half, or double, whatever it is, $7 on $3, so whatever it is on the options. And if it happens in a way that's conducive to trade it intraday, then I'll probably even do it better. But overall, the next week I think is important there. And if nothing happens and it starts to fail, you go back to this chart and you will see that, below this, area, this 420, you have to really, look at the longer term chart here, which if you look comes into play, there's support well underneath. Okay, you're talking 400-ish, and then you're talking even bigger support is like 360, and then you have a point of reference right here. So this is your last little area that you know, and let's hope for Apple investors out there that have been suffering that it doesn't break this, and we shall see. A lot of people love trend lines like this because it's exciting when a new trend changes, especially if you're not caught long this one, and then if you were playing this from the short side every time it hit the trend line, then you stop trading that way because something changed. So we're at that action area where traders get very enamored with the situation, because with this type of situation there is big opportunity, and so far it hasn't happened yet.
Right, and a lot of ulcers have happened as a result, I think.
You want to see? I got blood going through this green shirt. These little paper cuts, hurt a little bit, but it's better than a gusher.
Right.
There are guys calling bottoms in Apple from 600, 560, and the cost averaging down. Chances are they're not sleeping well at night, and they might even have puked it out, and then they missed a move because they're trying to use an opinion where the bottom is until letting the stock show you, and the stock has not shown you yet that it has hit a bottom or has changed character, so we'll wait for that.
All right, well, we have time for one more question. We've gotten a few today about Yahoo, going long Yahoo. We have one from JJ here asking if you could advise on an entry point.
What's interesting is, Yahoo was from the 2013 thesis, said 24 to 25-ish was the goal, and it's happened quick. Last time it had a nice pivot point, was I think 21.45 when I took that trade. It was nice, and then it's been resting. I actually entered Yahoo today. I'm not in love with it. I'm not in a tier 3 yet. This was like your core trade. Remember, I talked channels, and I love the channel here. On earnings, it gapped above 1660. This was your nice entry. And then, the last level was right here when it went sideways around above 21.45, and I do believe I tweeted that. Not exactly sure. And then, today, it pulled in. It's touching the 8-day. It's right near where it broke out from. You have a new channel here. So I nibbled a little bit, and I'll trade it versus this area. It might need more time to let the 21-day catch up. On this pull-in, the 21-day caught up. On this pull-in, 21-day caught up. So it might need that. So I think at this point, I'm in small, and then we'll see, if some more momentum comes back as you go to the weekly chart, or just say the monthly chart, and you will see that there still seems like first of all, look where it came from. So on the monthly chart, which you have to go to a lot of monthly charts these days, it seems like as if it could get to this 24, 25. But again, look at the move it's had so far this year, and who knows, maybe even get a little bit closer to 30. So I still think that the digital era is here. People like the new CEO, and it's been acting better, which is the most important thing.
Right. So in closing, 10 straight up days. What are your thoughts heading into the last trading day of the week?
I hope tomorrow's a good day.
Fingers crossed.
No, first of all, if you ever say hope, you're in trouble. You better know what you have and why you have it and not hope for anything. So my best, I guess, advice is to say, if you're not happy with your performance, change a little bit. Okay, if you're just shorting strength and you say it can't happen, it can't go anymore, it's not true. If you're holding 4 to 7 positions and those aren't the ones working, look to see what's somewhat working. If you're not where you want to be for the year, don't revenge trade and just start doing it, something different now as we're, like you said, 10 days up. So wait to see if we do get some kind of pullback and then how you can enter, or if you do buy, know that there might be a pullback and you don't get scared out of your stock. But overall, tomorrow will be interesting because, again, you look at the Dow here, and it's had a heck of a run, and on the daily chart, it just actually let the 8-day catch up, so it's really not that overbought, so it can continue. For me personally, what do I need to happen? If you're a member of my virtual trade floor, if you come back to me, you'll see that I have like 7-8 positions on. A perfect world would be that Apple actually acts better and triggers above 439 for a trade. That would be good. I would be happy with that. Another thing that I would like is to see some continuation in some of the casino stocks that woke up, especially MGM. Also, like I said, I'm in Yahoo. I've been riding out Bank of America. I'd love to see that, the Fed says that, some of these banks could give back, money and have a buyback. So I think Bank of America, that has been a really nice trade for us throughout the course of this year. Here is your 995, here is your 1060. Bank of America is going sideways. So I did re-enter right around here, and I still have a decent amount. It's showing some commitment up here. So for me, I'd like to see Bank of America, continue higher. And then also today, some money rotated into the OIHs. Okay, I remember when I did this, what was it, a month ago? I went along the OIHs and some of the stocks, and it broke out, looked great, and then failed. So here you are again, breaking out. It's a laggard play. So, but I've been watching money rotate. So rotated a little bit to OIHs. So I got along Schlumberger. Schlumberger right now, after trying a few times, I think we even talked about it failing, and it might be a short, and it wasn't a short. We needed more time. So you go back here, it finally had a clean break above this wedge. But again, lower level wedges when markets are on the highs are a little harder to trust. So I did buy some, and I'm long Schlumberger. Halliburton looks like it got a little attention on its way up. I think some people said another lag in NOV starting to wake up down here. So money's starting to rotate. So for me, the market could be up. It doesn't necessarily mean that I'm making money. It's like that's a problem. Like even Mark, he's got 25, 30 positions or something like that. And if you're not in the right stocks, it looks like the market's going up, but it's somewhat specific. Right. Like who right now, to be honest, who's in Hewlett-Packard? Look at Hewlett-Packard. Who would have thought that after being left for dead, you had this reversal, at this point would be like this mega cap leader, okay, which it has been, probably squeezing a lot of people. So I'm just saying, don't have opinions. No one would have thought, 2 weeks ago that this would be at the highs of the year and Apple still couldn't find a friend and, this and that. So at this point, keep judging things on either like a very micro sense or just give things more room. And the only way you're going to be able to perform or know that is your own risk and your own time frame and your own skill set. And like I said, there's lots of people getting rewarded in this market, whether you're a macro investor who just puts money into a 401k every month or even a 529 for your kid, or you've picked great stocks that are historic highs, or you're using a portfolio approach versus tactical approach and intermediate trends, which is my sweet spot. But if you're not doing anything and you're not trying to learn how to do anything, then you're not going to get anywhere. But if you just watch this full show and dealt with me and Brittany, at least you're trying to learn something. And having Brittany here is probably a little bit easier than listening to me talk.
Well, you're getting lots of thanks here on StockTwits for all of your advice. And thank you guys for sending in such great questions. We'll meet you right back here next week. Have a great night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, We teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.